Bitcoin continuing its plunge towards the bottom of the symmetrical triangle we discussed at the end of yesterday's video. Do the baby bulls have the strength to initiate a giga bounce, especially in the face of a potential government sell of over 30,000 Bitcoin? If there ever was a time for the butthead bears to perform a giga dump straight towards baby bull kind, the time is now. Or do the bulls have a reach around surprise up their sleeves as well? As we discussed at the end of yesterday's video, Bitcoin fell to the bottom of the symmetrical triangle, which has the potential to actually end in a bullish bust to the upside. But there's also something else much bigger than that as well. So if days like today don't scare you, but in fact get you a little excited, hit that like, hit that subscribe, get signed up to FEMX or BINGX Blow if you want to buy Bitcoin or altcoins. Join Tyler's Crypto's Red Alerts if you want to earn free PT simply by chatting in the group. And without any further ado, let's absolutely jump in here. So we see Bitcoin in a very interesting spot, and there's a few things I want to look at and also a lot of the charts, but there's one big thing that I think people have a giant misconception about, and it directly affects Bitcoin, the stock market, the DXY, literally everything, and that is rate cuts. So whenever I talk about rate cuts being a bullish thing, I get bombarded with comments of people saying, well, every time rate cuts have happened, the market has tanked a little bit, right? It does end up going up after a decent amount of time after these rate cuts are introduced. But a lot of people love to point out that rate cuts themselves are actually, they coincide very often with actually a downward move in the market. But there's one thing about that you absolutely have to understand. Why? In the past, why has the Fed cut rates? Pretty much to ease the economy. Rate cuts are basically used in times where the economy basically isn't looking good. So pretty much the economy isn't looking good, Fed rate cuts occur, and then we see the market dump. And a lot of people assume, oh, well, we had Fed rate cuts, that must be why the market is dumping. That's absolutely not it at all. The reason the market is dumping in those scenarios that people like to point to in the past is because the economy wasn't looking good. And the rate cuts are a measure that the Fed takes to try to, make the economy not get dumped on as much. So basically, what's happening right now is that we started off the year 2024 with just 2 or 3 months ago, right? Just 2 or 3 months ago, most people assumed we were going to have, quite a bit of rate cuts. And a lot of people even assumed by now we may have already had a rate cut. We don't. And as this first quarter has played out, as we just began the second quarter, we're 3 entire months into 2024. Now people are saying, well, maybe we'll get 1 to 3 rate cuts, which is lower than what was expected just a couple of months ago. And hey, maybe in 2 months from now, maybe people will be saying the base case is that we actually don't get any rate cuts. So there's 2 ways to look at that also, is that why? Why is the idea of rate cuts maybe getting taken off the table? Well, it's because the economy, the labor market, a lot of these metrics that the Fed likes to look at to gauge the health of the economy are actually a little more resilient than they thought it was 3 months ago, 6 months ago, right? Basically, this market so far has been able to take a few extra punches that a couple of months ago the Fed thought maybe it couldn't take. But it has been able to absorb some of this, basically having these rate cuts longer or higher for longer. So what that means is that the Fed really, and in my opinion, I think honestly, my opinion on this is that I think the Fed probably should hold off a little bit on rate cuts because there's no point right now where the economy it's absolutely not good by any means. I don't think the market is healthy, but comparatively, especially relative to what people thought it was going to be, it is doing better than what people thought it was going to be, right? It's absolutely not good by any means, but it's better than expectations were. It's better than what the possible scenarios were. So if the Fed would cut right now, let's say they cut at the next meeting, when there's not like an urgent reason to cut right now, the big problem there is that then risks the possibility that maybe over the next few months, if inflation starts climbing again, not only will we will have to stop cutting rates, they might have to start raising rates again. So it's a fine balance of right now we're just holding. The rates have remained unchanged for months. it's basically the next big move is either going to be cutting rates, and nobody expects that we're going to be raising rates. And I don't think we will raise rates unless we cut too early. And basically, my point of saying that is that I started off a minute or two ago saying that people think that if we get rate cuts, that means the market's about to dump. Well, we might not get the rate cuts because the market is a little stronger than people were anticipating. And if this is the case for the next few months and the market remains as strong as it is, even though, as I keep saying, I don't think it's very strong, it's just stronger than what people were expecting it would be. If the economy is able to not be very bearish and can continue to take these higher rates, at some point in the future, there will be rate cuts, but we can have it where the market ends up going up when we get those rate cuts, because we don't, as I said, I tried to explain this, we don't have to dump just because we're getting rate cuts. It just so happens that rate cuts usually coincide with very unhealthy market conditions, which dump the markets, and then people assume that the reason we dumped is because of the rate cuts, but that's not the truth at all. So anyway, we are seeing a correction today. Actually, if we look at the broader markets, the SPX is down, right? It's actually testing on its 21-day moving average. We see the NASDAQ down 1%, the Dow Jones down over 1%, SPX down about 1%. We actually saw the DXY was up a little earlier, but it's actually down right now as well. The DXY is down today as well. Bitcoin is down today also. But why? Why are these markets down? Are the markets down because inflation is coming back massively higher than expected? No, it's not, right? That's not why the market is moving down, which, if you look at the bigger picture, is actually the better scenario. Because if the markets were dumping right now, the stock market, crypto, all of these other assets, if everything was dumping right now because we were seeing so many signs that inflation was ramping up again, that would be basically the worst case scenario. And it would take rate cuts off the table. But I believe right now that the reason the market is dumping right now is because, one, the SPX hasn't seen like a 2% drawdown in such a long time, I believe for like the multiple months. Look at the SPX. The last time we had even a sustained downtrend, I don't know, you have to go back pretty far. Maybe all the way to October 2023 was like the last time we actually had and it wasn't even that long. It was a V recovery, so it ended up going straight back up basically. Really from about July to November, this was actually, that was the downtrend. And then we've entered, you can clearly see an uptrend. So the market, first of all, needs a correction. It's not a bad thing. We can't go straight up forever. The lower we can go in a healthy uptrend, the more juice that can give us to then continue to go up, both for stocks and for Bitcoin. That's true in all markets that are healthy. You need pullbacks anyway. But I think that, this is a good old-fashioned correction in a healthy uptrend. Now, if we start to see inflation actually come back much stronger in the data that's put out, that's a different story. But we can't jump the gun on that because that simply hasn't happened yet. Okay, we can't assume that's going to happen because so far the data is not giving us any real reason to assume that is what's happening. Could it happen? Absolutely. But to assume with certainty right now that it is happening is foolish because there's simply not enough data pointing that direction. But as I just said, it could end up turning that way. But it also could end up turning the complete opposite way to where inflation actually is like relatively cool. Even though, again, as I keep saying, I don't think inflation is good right now. I think it's still very high. But in terms of what expectations are and what the market is priced in, it's overall so far it's not that bad compared to expectations of kind of taking into account the last couple of years and what exactly has been happening. So with that, if we actually look at Bitcoin today, at the end of yesterday's video, actually around the 14-minute mark, I talked about what I said in the video. You can go watch it if you want. It's like the last 2 minutes. I thought the most likely scenario was actually that we were probably just going to consolidate within like a symmetrical triangle, potentially even a bull flag here. And what I said in the video was that would require us to go down, but not as far down as what I had talked about earlier in the video, which was I was talking about what would a worst case scenario look like. But right now, we actually have gone down since then. Bitcoin was right about here when I posted that video, and now we're here. And we actually have seen, if we zoom in on the 4-hour chart, we actually have a little bit of a bounce. This to me is not like a very strong bounce yet. So this is not something I would assume, okay, now we're just going, I would not assume, okay, now we're just going straight back up, right? We would need a much stronger bounce and maybe even just consolidating along the bottom of here first. But at this point, so far, because this could change, we have a series of lower highs, but also higher lows, which is a consolidation pattern, which is, a potential symmetrical triangle. So overall, that's not really bad for Bitcoin's price at all. As I said, if we got a pretty nasty dump that could take another week or two, 58,000 is a gigantic level of support. It's where the biggest area of accumulated VPVR volume or VRVP volume is on the chart. The next closest, basically the lower we go, the more giant amounts of support there is on the chart. But this is the first really big level of support, right around like 58,000 US dollars. And actually, I actually want to highlight a few other things first. So we see the US government just moved about 30,000 Bitcoin from the Silk Road hack worth over $2 billion to Coinbase. So this needs to be watched. Is it going to be sold? What's going to happen with that? Zach XBT talking about these funds. They did a test $69 nice transfer to Coinbase. That's crazy if that's actually true. It says 0.001 Bitcoin transferred to a Coinbase deposit address, so it's a test transfer possibly. However, there's an update. There was about 140 million transferred to the same Coinbase Prime deposit address afterwards. Okay, insane. But we also see this. So if the Bitcoin price does come near the short-term holder cost basis, which is right around 57,500, exactly that level of support I just talked about, On-Chain College says he's buying more. Basically, this is like, if we zoom in on this chart right here, this is pretty much premium buying or premium long position entry opportunities at this line, and that's around 58,000 US dollars. So yeah, I agree with that 100%. If Bitcoin ends up coming down to this level right here, to me, that looks like a premium long opportunity. And that is also what this indicator shows as a very important level. We also see it's important to note that crypto is still being adopted twice the speed of the internet and should reach about 1 billion users by the end of next year. Which, think about that. If that actually happens, imagine the actual growth we're about to witness in just the next pretty much 20 months. That's a massive amount of growth that's possible. And on the daily chart, clearly now we have seen Bitcoin fall below the 21-day. Big level support is right about 63, which is where the 50-day moving average is. It's also the bottom of the Bollinger Bands here. Bollinger Bands are still very, very tight, in fact. Actually a little tighter than yesterday. Meaning I don't think we've seen the big move yet. I don't think we've seen a big move. I think we're going to see a massive move here. In the short term, though, that could be, and I've been saying this for weeks, that could be a downside move. There's no guarantee this next big move is going to be an upside move. Symmetrical triangles basically can break down just as much as they do up. But we are holding support, and it'll be interesting to see how this plays out. Very big, actually, very interesting. As I've been saying, too, the more we correct in the short term, the better it will be for Bitcoin during the halving, post-halving, and just the more of the cycle we have left. The more of a dump we get out of the way right now, I think the healthier Bitcoin will be, and the more bullish we can be bullish longer. We don't want to just go straight up because that really just puts us in jeopardy of just having a shortened bull market or having a bigger, more sustained crash, which I feel like most people probably don't want that. But I mean, again, I keep drawing your attention to this chart, this weekly chart. Is this like a massive pullback? No, it's really not. So honestly, what a real pullback would be probably a few more weeks. It could even be a few more weeks, and it could be over $10,000 lower than we currently are, and that would still not even be a massive pullback, right? It really depends. I think that I don't think we need a massive pullback, but as I've been saying, I think it would be a blessing. I think it's better for the market if we actually get one. I've been secretly hoping we get one. It doesn't really matter what I want, right? But might as well just share. I secretly have been hoping that we actually get a true pullback that resets so much of this market so they can end up, continuing to climb higher. Because realistically, these pullbacks have been very weak compared to previous bull markets. So I think it's really important to watch this, see if we get a bounce here. If we don't, then some of those other targets I talked about are realistic. And get signed up to FEMEX or BINGX below if you want to buy Bitcoin or altcoins. And as well, join Tyler's Crypto Red Alerts by just clicking the link below. And all you have to do is, send some chats, and you have the chance of earning free PT every 8 hours. Without further ado,